We're talking Disney, getting ready to report its quarterly results after the bell today, and it's been a tough year for the company. The media giant has seen its parks business slow, coupled with declining subscribers for Disney Plus, all while handling the looming question of succession. Well, let's bring in Yahoo Finance's Alexandra Canal for more. Hey, Ali, what are you expecting?
Hi, Rochelle. Well, there's going to be a lot to discuss. We just got that announcement that ESPN will be licensing its brand to Penn Entertainment to get into the sports gambling business. That should be interesting considering Bob Iger wants to take ESPN fully over the top as a direct-to-consumer streaming service. I'm sure there's going to be a slew of questions related to ESPN on the earnings call. But in terms of the actual report, it's going to likely be a pretty challenged quarter for Disney. Disney Plus is expected to have lost about 3.6 million subscribers in the quarter, and that comes after they lost 4 million subs in the last quarter. We're also expected to see streaming losses accelerate on a sequential basis. Right now, estimates are calling for streaming losses to mount to 778 million. That's compared to a loss of 1.1 billion in the prior year period. Now, Bob Iger, he has consistently reaffirmed that the company will reach streaming profitability by 2024, but that's going to be a pretty bumpy road ahead. And speaking of bumpy, you also have that shaky advertising environment with linear network ad revenue. That's expected to decline in the high single digits, very similar to what we've seen from other competitors. On the studio side, we're likely to see some softness there, considering we saw disappointments from the live action Little Mermaid and Pixar's Elemental on the theatrical side. And then overall, we have the Hollywood writer's strike. That's a big question mark moving forward. The park side of the business, that should be the bright spot for Disney. It typically is, but even there, we've had Wall Street analysts seem pretty concerned that there is some softening in demand there amid high inflation. So a lot to dig into this report. Bob Iger is certainly going to be faced with a heck of a lot of questions on the earnings call. We'll see what comes out of it later tonight. Those break right after the bell at 4 p.m. Eastern.
And you figure trying to balance everything, the strikes, some of the slowdowns that we're seeing, what are we expecting to hear, if anything, about potential succession plans?
Well, that's a big question mark, right? Bob Iger, he recently accepted that contract extension through the end of 2026. Now, what's interesting is that we did have a report that Kevin Mayer and Tom Staggs are joining Disney as advisors to Iger to help with that ESPN direct-to-consumer transition. They had long been in the running for the CEO position, so you wonder if that's Iger trying to suss them out to see if maybe they could possibly replace him. And it's going to be a question mark whether we see an internal candidate, perhaps an external candidate. We also have Josh D'Amaro, who runs the park division. There's a lot of people internally that I could see potentially step up to that role. And as important as succession is, I think right now Bob Iger is really just trying to set up Disney for its next phase of growth, really reset the strategy. So in a way, it feels like succession is a bit on the back burner considering how many issues are on the table right now and how much Bob Iger, all the decisions that he has to make at this point. So that's something that we're going to continue to track, and I'm sure Disney top of mind for them as well.
Indeed. I know you'll be following all of that for us, our very own Ali Canal. Thanks so much.